Hello and welcome back. I'm Jake Holhouse, CEO of HH Insurance. Following the intense 2024 hurricane season and the historic flooding in Southwest Florida, we've received some important questions from our clients about flood insurance. Today, we're diving deep into three major questions. What is going to happen to flood rates? What is actually covered on a flood policy? And can you get more than $250,000 of flood coverage? We'll break these down into 6 comprehensive answers to help you navigate your flood insurance needs. Let's get started. One of the biggest concerns we've heard is about the future of flood rates. To understand this, we need to look at the 2 main types of flood insurance: the National Flood Insurance Program, or NFIP, and private flood programs. The NFIP writes about 90% of all flood insurance policies in Florida. From 1975 to 2021, the NFIP used what was known as Risk Rating 1.0, which primarily based rates on the flood zone and the elevation within that zone. This meant that 2 houses in different counties, but within the same flood zone and elevation, would have rates often within $50 of each other, even though they have different risk profiles. This means that a house in Key West and Orlando had the same flood rate in an AE flood zone while having 2 different levels of risk. In 2021, the NFIP introduced Risk Rating 2.0, which redefines how buildings are rated by incorporating location, value of the structure, and elevation. While this aims to accurately reflect risk, it has led to significant rate increases, especially for coastal homeowners. Rates are increasing at 18% per year for existing homes with continuous flood coverage, a process that could take 10 to 20 years to reach the new NFIP rates. For homes built after 2021, or those without continuous flood coverage, since then, NFIP rates should remain relatively stable, even in coastal areas. However, private flood programs are facing challenges as well, especially for low elevation, slab-on-grade homes where we anticipate substantial rate hikes. We're proactively reviewing renewals 90 days out to explore various options for our clients. If you're considering switching from a private program to the NFIP, keep in mind there's a 30-day waiting period from the time payment is received for the new coverage. For elevated homes with private flood insurance or those in COBRA flood zones without flood claims in 2024, rates are expected to remain stable with potential increases around 10%. Remember, each situation is unique and assessed on its own merits. Another common question is about what exactly is covered under a flood policy. Understanding the exclusions is crucial to ensure you have the right coverage. Both the NFIP and most private flood programs have standard exclusions. Pools and pool equipment are not covered under flood policies. Docks and seawalls, these structures are also excluded. Enclosure space coverage for homes built between approximately 1975 to 1983 or later, depending on the county, coverage for enclosure space, finished work, and contents within these enclosures is limited. Even legally built below elevation elevator shafts are not covered. In terms of enclosure coverage, it's quite limited. For instance, bare drywall is covered, but taped and textured drywall in a finished foyer typically does not cover. Similarly, contents inside of garages of homes built after 1975 to 1983 or later are not insured for flood damage. For condo owners, if your association has what is called an RC BAP policy, it covers the interior rebuild of your unit. However, your personal contents, like furniture, are not covered by the association's policy. To protect your belongings, you need to purchase a separate policy for your contents. Lastly, a significant challenge for all flood policies, whether single-family homes, commercial buildings, or condo units, is that contents are typically paid at actual cash value, not replacement cost. This means you're reimbursed based on the depreciated value of your items, not what it would cost for you to buy new ones. Lastly, many homeowners ask if it's possible to secure more than $250,000 in flood coverage for their homes. Here's what you need to know. There is a flood policy known as excess flood coverage, which can provide more than $250,000. Think of it as a policy with a $250,000 deductible, where the NFIP policy covers this deductible. However, obtaining excess flood coverage isn't always straightforward. Excess flood is typically not available in the following cases. Prior flood claims. Homes that have had a previous flood claim are not eligible. High-risk areas. Properties located below the floodplain in high-risk zones, such as slab-on-grade homes on barrier islands, are not eligible. Non-compliant construction. Homes that are now considered non-compliant, for example, those homes where flood vents have been removed or enclosures have been finished without permits, are typically not eligible for excess flood coverage. If you believe you need excess flood coverage, please reach out to our team. We can assess your situation and provide a quote if it's available for your policy. Please note, the information we've shared today represents the opinions of HH Insurance and is not intended to supplement your policy language. It's not a substitute for specific policy advice. Every situation is unique, so we encourage you to contact us directly with any questions or concerns about your flood insurance coverage. For personalized assistance or to discuss your flood insurance options in more detail, visit our website or give us a call. We're here to help you navigate these changes and ensure you have the coverages you need. Thank you for watching, and thank you for your continued trust in HH Insurance. Stay safe, and we'll see you next month with more insights. Have a great day.